Cheers. It's green. Green represents money. And in business, you have income and you have expenses. And it's even. Do you want them to be even? That's what we're going to talk about today. In business, we have what's called break even. But what is break even? The definition is this. The break-even point is a fundamental financial measurement that managers use to ensure the company has enough income to cover the expenses of the business. It's defined as a point where sales and expenses are the same, or when the sales of a company are enough to cover the expenses of the business. I know. Mumble-jumble stuff, right? Let me simplify it for you. What you really want is you want to know, what is it going to cost me on a daily, weekly, monthly basis to run my business if I don't have any income coming in? What money do I have to come in just to break even to survive? And that is a good starting point to know what kind of sales and revenue you need. So where do you find this break-even number? Well, the first place to look is on your profit and loss statement. You want to look at things like rent, insurance, your cell phone, your utilities, your internet, I might have said insurance already, your gas. What happens if you have a person who works in your office, like an office manager or an assistant, an admin? They would still need to get paid. Your cell phone, that would still need to get paid. Your toll, like if you have tolls in your car, that would still need to get paid. Those items that need to get paid regardless if you make a sale or not, that still need to get paid. Now, what items on the P&L shouldn't you worry about? Well, I personally wouldn't worry about meals, because if you're just breaking even, you can't afford to go out and get like meals and coffees and stuff like that. You shouldn't have to worry too much about professional development, because at this point, you're just trying to break even. Contributions, donations, I would probably hold off on that. It's not a necessity to keep your business running. Now, once you have that extra income, can you do those things? Definitely. Travel would probably be another one of those items that I would probably not put into that break-even number. But your P&L is not the only place to look for that number. You also want to look at your balance sheet, because there's a few more numbers you need to look at. You want to look at what kind of loan payments do you have? What kind of credit card payments do you have? What are those minimum payments for those credit cards? Do you have a car payment that needs to be also put on that sheet that you have to make, that you won't find on your P&L? The only place you will find that is on your balance sheet. Are you a sole proprietor or an LLC? Well, your payroll, what you pay yourself, is not going to be on that profit and loss. It's going to be on the balance sheet. So you want to make sure you add those numbers. Now, are you a full-time business or are you a seasonal person? So my suggestion, if you're seasonal and you only work 9 months of the year, you're going to want to find out what those break-even numbers are for the month, for those 12 months, and then divide it by 9. And then that's going to be the number you need to break even every month. Because in the long end, you want your income to be way higher than what your expenses are. So with that in mind, to your income and to your expenses, cheers.
Hi, I'm Tristan, Gina's son. I just want to tell you to like, comment, and subscribe below. And also, when you subscribe, hit that bell for all notifications for future videos. Also, I'd like you to comment what future ideas you have for future videos of ours. And with that in mind, this is Green Tree Bookkeeping, the place where you can hang. This is Green Tree Bookkeeping, the place where you can hang your hat on.